And there it is, the closing bell of the New York Stock Exchange, capping off another trading day on Wall Street. Let's take a look at where the numbers fell when it was all said and done. Not a strong day for the stock market. You see the Dow Jones there falling more than 600 points.
The S&P 500 and NASDAQ also fell, each more than 2%. For more on all this red, let's bring in Dan Ives. He's the managing director for Wedbush Securities, an investment firm. So, Dan, what was driving the markets today?
It's really about that election. I mean, there was a hope that you were going to have gridlock. You get the red wave, that's bullish for stocks. Instead, there was nothing in terms of a red wave. It was the opposite. And I think that's the market's reaction here. It's really about the political landscape. And then, of course, you got CPI coming, a jittery macro. It's not what the street wanted to see.
Yeah, so since the Republicans didn't have a red wave, the market created one today.
That's a good point. But that's also interesting to know.
That's exactly it.
You know, that because it was, sorry, Dan, go ahead.
No, I mean, I think also like the market was building in a core gridlock.
Yeah.
And instead of a red wave, you got a whimper. And ultimately, as that plays out, you're seeing that risk come out of the market today.
Yeah, we saw the rally on Monday and in anticipation of perhaps the red wave, meaning political gridlock. But there are some other factors I want to ask you about, because this week we saw overall demand for mortgages drop for the 7th week in a row, driven by a declining refinancing rate, which makes everything more expensive. But applications to purchase a home saw a slight increase. Can you explain the disconnect between the two there?
That's a head scratcher. I mean, you could argue what's going to start to happen now is just a stalemate between sellers and buyers.
Yeah.
And ultimately, you'll start, as in spring, you'll start to see those massive price cuts. But look, this whole market, not just in terms of the housing market, but the overall stock market, it's all based on the 10 years, it's all based on interest rates.
Yeah.
You got a 30-year that's above 7. That's going to be some pain in terms of mortgages.
Yeah. Well, I'm wondering actually if that isn't part of it then, Dan, because there were a lot of analysts who thought that after this latest increase that the Fed was going to sort of taper it down. But what we heard from Chairman Jerome Powell was that we may still be looking at some aggressive rate hikes. Talk to us a little bit more about what we're seeing in terms of the interest rate hikes, the mortgage rate, CPI, and what we should expect for tomorrow.
Yeah, and CPI tomorrow, I think there's nervousness because every CPI, you're hoping inflation tempers and you get a hot CPI number. And anything in the 8s will be viewed as hot. I think when it comes to Powell, they're aggressively going after inflation. You'll see another 75 bip hike coming up. And then I think you start to see slower hikes, but they are going to aggressively get this under control. And I think the market, every time you start to get into the taper camp, maybe a green shoot, ultimately that really comes crashing down. And I think this is just the market adjusting to the new reality until inflation gets under control.
Yeah. I certainly have heard from people who think it's better to buy a house now because they think that these interest rates are going to just continue to rise.
Hey, if you've got the money, right?
Yeah, well.
So that's the main thing. Dan Ives, thank you very much. Great to chat with you.
Thanks for having me.